Hello, hello. Hope everybody is doing well. I am live here with Mernie Mendoza, who is
Okay.
one of my preferred vendors. This is part of a three-part series. So we're in part three. You don't have to have watched the other ones, but maybe after you watch this one, go back and watch the other two because it's been a great series. I love these live series and getting to talk about the questions we get all the time. Just, things that are on people's mind. It's Q1 of the year. And so there's a lot of financial things on our mind. So the first live I did was with Jackie Coder. She was talking about taxes and planning for taxes and, all of that. And then we had Christina Springstead on here talking about bookkeeping and specifically reports, right? What reports should you be looking at for your business, things like that. And now we have Mernie here to talk about kind of the more holistic financial picture, right? Retirement. She is more on the financial planning, personal financial planning side of things. So, Mernie, if you want to introduce yourself real quick.
Yes. Hi, Jamie. It's always a pleasure to be here with you. And I actually have been watching the other two. I went in preparation for this one. I went back and watched the first one with Jackie and the second one with Christina. And it's a great series. I like what you've done with it so far, and hopefully we'll add a lot of great value to this today too. And so, as Jamie mentioned, I am a financial professional. I am a certified financial educator. And so I've been in this field for more than 2 decades, going into my 24th year now. And the reason I decided to go with a certified financial educator designation is that I like to lead everything with education. And so, although I do have all of these other licenses that allow me to do all kinds of great things for people financially, I tend to not talk about those as much. And so, do have multiple licenses in my field, which is why I can take a more holistic approach to things rather than people that may have a singular license and they focus on one area of finances. And so I like to take a look at the overall big picture. And I'm almost like a financial sounding board for a lot of my clients. They'll call me for business decisions, for personal decisions, even if they're looking to buy a car and they're not sure if it's a good decision for them. It's good to have somebody to be able to bounce these ideas off of. And so, and I'm also a unofficial therapist for some of my clients, financial coach, like all sorts of different things. But all of those things actually, one way or another, relates to their finances because we are
Yeah.
very emotionally connected to our finances as well.
Yeah, that's one of the things you don't realize when you get into kind of financial education is how much of that therapist role you end up playing unofficial therapist role,
Yes.
right? But there's just so much tied up in it for people. And so we can teach strategies all we want, but really we also have to, think about the whole person. Like we're real humans with real emotions and experiences and things like that that have led to how we think about money today. And I think that that's one of the first things that we connected on, Mernie, was like our love of financial education, right? Like the
Yes.
teaching side of things is my love as well. And I know it is for you too. So I just think that's kind of a great match that we have had and be able to have these great conversations about finances. So let's definitely jump into it. I want to talk real quick because you mentioned right how you talk to your clients about all kinds of different decisions, right? I think one of the questions I get a lot is like, who do I go to for what? Right. And people think like, oh, I have an accountant, I'm going to go ask them about my retirement, and where they might be able to help you figure out your limits, they're not necessarily going to be the ones to advise you on your long-term strategy, right? So I
Mhm.
think all of these people together, it's good to have people that are really good at the thing that they do. And it's not going to be just one person, right? If you're a business, you probably want to have somebody doing your books. You probably want to have somebody doing your taxes, including like proactively looking for ways to save. And then you probably want
Mhm.
somebody like Mernie who's helping you more with your longer term goals, right? Like that could be retirement, but just in general, that's just your financial picture. What are your goals? So how do you when people come to you, right? Like, how do you help them figure out? Because usually they're probably like, what do they say? Like, are they usually just like, I don't know if I'm doing this right, or what's kind of your first step with people when you get a new client?
Yeah, that's an excellent question. So, as you mentioned, most people come to me and they say, I have all these accounts, but I have no idea how they work together. Like, I have
Yeah.
some retirement account here. Sometimes maybe they've had two, three, four different employers. So they may have previous employer plans, or they made a little bit of money, so they open an account, or somebody says, oh, you should have this type of an account, so they'll open that. And so they have all of these different things out there, and it's typically all scattered. And they're scattered all over the place, and they're trying their best to keep it organized, but they just don't really have a way, or they've never had anybody look at everything. And as you mentioned, when they go to their tax professional, their job, and I say that, and I have a lot of tax professionals that agree with me on this. Their job is to look at your current situation, typically for current tax year, or for doing last year's taxes, but their job is to look at what you've made last year or this year, to determine what's the best way to reduce your tax liability. Because none of us, and if anybody says they love paying taxes, I don't know, there's something wrong with them, right? I like paying my, I guess what I feel like is unfair share of taxes, but I don't want to pay more taxes than I have to, right? That's why you become a business owner. So you do have additional tax benefits. And so their job is to figure out all of the strategies and all the ways that they can reduce your current tax liability. And so a lot of that means that we're going to put money in pre-tax accounts, which is great for right now. But their job is not to think about 20, 25, 30 years down the road when you're actually going to access all of that money, and that's how that's going to play into your overall financial picture. And so, and because I see this all the time with people that are now closer to that other side, when you're in the accumulation phase, you want to think about, what's happening right now. But when you're in the distribution phase, now we're in a place where we have to look at what do we pull from in retirement, what's the most, tax efficient way to do that, and also make sure that we don't run out of money once we are retired. And so, but on the back end, the more money we have coming out from taxable accounts, which what I mean is tax deferred accounts such as 401ks and IRAs, all of those things that saved us taxes, when we put the money in on the back end, that could hurt us, because the more we have from those, it determines how much we have to pay towards Medicare. It determines if part of our Social Security becomes taxable. And so there's all of these things. And not to mention, we have no control over the tax rates and what the tax brackets are going to look like in the future. So we may be in a 22% tax bracket now, but 30 years from now, maybe the minimum tax bracket is going to be 30%. And so this old-fashioned wisdom of you're going to be in a lower tax bracket and when you are retired may or may not be true, because we have no idea what tax rates are going to look like. And even though it doesn't feel like it, but we're still currently in historically low tax rate environment. And so there is a likelihood that taxes will go up at some point in the future. And so my job is to not only worry about today, like let's see how much we can set aside in a tax efficient manner today, but also how much can we set aside so that the future will have a little bit more of tax balance, so that 100% of your future income is not going to go, is not going to be subject to taxation. So these are the areas where it's different. And I do work hand in hand with CPAs all the time, and tax preparers, because I don't do what they do. I can't advise you on how to file your taxes or what that's going to look like. But sometimes, business owners are told, go open either a SEP IRA or simple IRA or solo K. And so they come to me and they're like, I see all of these acronyms, I hear these words, what the heck do they mean? And so my job is to explain, this is how the SEP works versus the simple versus the solo K. And then, based on your situation, like you have 2 employees. So actually you're not even eligible for the solo K. We need to look at these other options. But just being able to explain that in a way that's simple and easy to understand, I think is something that women look for, because we don't want to be mansplained. We don't want to feel like, that person is judging us for not knowing what we may not know. And so that's one of the things I actually hear a lot from the women I meet, especially through your group, is that they love working with a female financial professional. And we call it a judgment-free, guilt-free, shame-free zone. And this is where they can come as they are, no matter where they are right now. And together, we're going to get them to wherever they want to go.
It's funny that you mentioned the mansplain, and not to, I don't think all, male professionals are this way, but I have personally experienced when I purposely don't tell people what my background is. And so I have talked to people who are in kind of the financial planning professional, and just the way that I have been talked to in the past, I love to just then interject and show like, hey, actually, I know what I'm talking about, and just like bust all those preconceived notions, when I feel like I'm being patronized a little bit. So that's a little fun pastime of mine.
Well, my favorite is I'm with my husband, and like somebody, like a salesperson is trying to sell us something, and it's like, financial, they're asking about financial stuff. and they don't pick up on the fact that the whole time my husband's looking at me so that I can answer because, I handle the financials in our family. But
Exactly.
the
My
male
husband,
salespeople, for some reason, don't pick up on that. So they have this whole conversation with him, and he was like, "Well, you should probably talk to my wife about this because she knows this
100%. And
better than I do."
that's my
So,
favorite thing is when they're continuing to look at him and I'm like, hey, he has no idea. He doesn't know what's in our checking account
yeah.
right now. It would take him an hour to figure out how to access it. Okay. Like,
Yeah, and I gotta say, obviously, there's some great men out there that are really great at what they do.
yes.
It's just sometimes they, because of how they're trained and how,
Right.
especially in the financial industry, it's just how it is. I mean, I still go to industry-wide conferences where they're like, "Oh, are you somebody's assistant?" It's like, no, I probably am better at what you do. than,
It's
it's just because you're a man and you see a woman. Because I walked into rooms where there's maybe 5 women and there's hundreds
yeah.
of men, and it's interesting that people still have those preconceived notions about
Yeah,
our role.
the financial world is still very male dominated. I was in the corporate world in finance and often would be like the only woman at the boardroom, right? Like sitting at the table.
Mhm.
And it just still is kind of an ingrained thing that we need to break through, and some of that is we need more women in this profession. Right, I think the more
Absolutely.
women we get in this profession, the better, on the finance side of things. But yeah, I think that's a lot of the reason that we do what we do, because it's really not as hard as people think it is, and if we have the help that we need there, we can do amazing things. I'm a really big fan of women in money do incredible things in the world. They just do. And they don't build rocket ships anyway. Just saying. Okay. All right. We got a like for that. Thanks. So one of the things I wanted to talk about too, that it just made me think of it, because what you said is exactly right, right? You got to think about when you're talking to a CPA about your uh, taxes. They're usually going to be talking about this year. Maybe if they're a really good CPA, they're also thinking about next year, right? They're thinking about like, okay, if you do this, then this, right? You hopefully are thinking about, is my tax rate going to be higher next year or lower? We don't want to just think about a year in a vacuum, because you might be shooting yourself in the foot for the future. We want to think more holistically. It's not what a CPA is paid on though, right? Like a CPA, you love your CPA when they're like, hey, I just saved you $12,000 this year.
Yeah.
Like that's when you're excited. You're not like, hey, this is going to be the best long-term strategy tax-wise for you, but it will cost you more this year. You don't want to hear that. But it
Mhm.
might be the best strategy, right? Like maybe it's something like using a Roth, not having everything in like your regular traditional 401k or SEP, and maybe some of it goes into a Roth type, right? It's just different taxation, different timing, but that could make sense for you. May not save you the most right now, but in the long term might be the best course of action. And so I think that's where it's a really good idea for working with somebody on the business side who understands the tax part of things, but also tell them, right? Say, hey, I want to do what's best for the long term. Most people don't go to tell their CPA that. So the CPA is probably going to default to like, what's going to get your tax bill down right now, and not necessarily thinking about that long term. That's where it's also good to then loop in a financial planner who you can say, hey, I'm hearing this, and I love that you work with people like that. I think that's a great idea, is to have an A team that actually talks to each other is amazing. Right? Because then now you can kind of come up with a more holistic view of what you need to do that's going to be helpful from your business and your tax perspective, but also is going to help you meet your long-term goals, and think about that, right?
Yeah, and actually, the other thing I forgot to mention with that is like, yes, people look at me and they think more on the personal side, but when
Yeah.
you are a business owner, like your personal side, even though your funds may not be commingled, but your life is commingled, right? Your
Yes.
business is your life, and it's funny. I took my daughter to the bank last Saturday as a life lesson because she was trying to figure out, how checks turn into cash because she got some checks over Christmas. Because when your grandparents are boomers, they're going to give you checks instead of cash. And so she's like, what, how do I turn this into money? And I realized she's never really dealt with the cash because the only thing she's seen is us direct deposit checks, through our phones. And so I said, we're going to physically go over to the bank and you're going to cash this check so that you see how this piece of paper turns into physical cash. And so we were there, and the gentleman before us was talking to the banker. And so, the banker's trying to make small talk, and she's like, "Oh, Monday's a holiday. Do you have any plans?" And he's like, "I'm a business owner. Like I work 7 days a week." And standing there listening to him, I thought, wow, like most people don't realize that. Like we, sometimes see the glamour and the glitz when it comes to being a business owner, but you don't see the grind and the 7 day, so your business and your life is way more intertwined when you're an entrepreneur than maybe when you're an employee.
Yeah.
And so even that, like I had a conversation with my daughter about that. So most people don't realize that. But on the business side of things, where I also help people is, let's say you have a business that may be a partnership and maybe you have a couple of different people involved. Well, there's also things that you have to think about from a planning perspective is, let's say you have a business partner and you love him, he's a great guy, but you're not so crazy about his wife, for example. If something were to happen to him, would you want to be business partners with his wife? The answer is probably not, right? Depending on what that dynamic is. Or that wife may have no experience running this type of business. So, she may not want anything to do with it. And so that's where sometimes buy-sell agreements or other type of business continuation planning comes into place. And that's
Mhm.
also an area that I can help business owners with. And
Mhm.
usually that's in conjunction with their CPA and also attorneys, because a lot of times
Yeah.
it takes legal framework to put that together. So I want to mention that because I know a lot of times I talk on the personal side, but after 2 decades of working with all kinds of people and a lot of business owners, I do have experience in all these different areas. And I think for business owners, that is probably one of the things that is often overlooked because, again, we're so busy in the day-to-day grind of today working in our business. But what about when you want to transition out of your business? Do you have a
Mhm.
business continuation plan in place?
Ooh.
Maybe you have 4 kids and one of them is interested in the business and the other 3 aren't. How are you going to handle that when the time comes? And so there are those types of planning things that we can do as well from a business perspective. And again, I think a lot of times that's overlooked by most entrepreneurs because they're just thinking the day to day and nobody really brings up those points to them.
Yeah. We talked about that a little bit earlier in the sequence too, in this series too, about the bus test, right? And sometimes we think about, uh, you know, I have had the opinion in the past, I'm like, oh, if something happens to me, then what happens in my business? And at times I'm like, well, I'm not here, so whatever. Right? I got some life insurance, whatever. I'm less worried about it. But then it's also like, well, wait a second. What if you are incapacitated and have to take time
Mhm.
off? Like, right? How can you prepare yourself for that? So I think there's just a lot to think about in these business continuation. I also think, have you seen this when it comes to business owners specifically, right? I think the way we've previously been taught, right, about and seen about retirement, I think about my dad. My dad is retired. He's been retired for a couple decades now, right? He retired like traditionally, right? Meaning he left his corporate job. He actually still got a pension. This was like right before, people stopped getting pensions. So he's still got a pension. We don't have those anymore, right? And he gets
Mhm.
Social Security, but he retired. So he had to have enough money saved up, thinking about too, how that's going to compound and things like that and his investments. But like his goal was to save up enough money so that he could retire and have no income other than his pension and Social Security. I think with business owners these days, one of the things that I've realized is like, I'm not sure it's my goal to really ever fully retire in the way that I'm not making an income at all. Now, do I want to be able to completely take myself out or take myself out of, my business or, any other investments like 90%? Sure. But I still want to set up income streams that are going to continue to pay me into retirement. And I think that changes the equation sometimes, right? Like, I think,
Mhm.
have you seen that too, where it's kind of like, hey, practically, if you've got, if you're a business, you have a couple different businesses, are you really going to sell all your businesses, and move to Hawaii? Maybe you are, but business, we love business. Like, we love to work. Like, you'd have to pry me away from this. Now, maybe not if I win the lottery, but like, have you seen that? And has that changed how people are thinking about retirement now?
Absolutely. So I think, retirement is not so much about stop work altogether. It's
Yeah.
more about making work optional. Right,
Yes.
so you have
Yes.
that lifestyle where you can choose to work if you want to, but it's not the daily 9 to 5 commuting
Right.
somewhere,
The
whatever
freedom.
that traditional sense of work is. And I think the other thing that has shifted, and I think more and more people are realizing, at some point they said, nobody's gonna have pensions. They got away from that. And that was basically when 401ks were introduced because the burden of retirement went from the employer to the employee. And when that happened, most people got so focused on creating, it's like all about the nest egg, like how much money, what's that
Huge
lump
nest
sum I
egg.
need to have to retire, that they forgot that that lump sum really means nothing if you can't convert it to an income stream. So I think we're going back to this idea of, you know what, Jamie, I don't think you care if your portfolio was worth, let's say 10 million, but it only gave you 1,000 a month in income. You don't really care about that size of that, like that 10 million makes no difference to you because it's only giving you $1,000 a month.
Yeah.
But what if you had a $500,000 portfolio that gave you 5,000 per month and it wasn't going to run out? You don't care about portfolio size necessarily. You care about your day-to-day expenses and that monthly income coming in. So I think we're going back to that where we're more concerned about not so much of like how big that nest egg is, but what is that nest egg going to give me? And based on what that produces for me, I can decide, because if I have this passive income of 5,000 or 10,000 a month coming in, then I may only have to work 2 days a week or work at my leisure, and I'm not stressed out about it. And guess what? When you're not stressed out about your work, it makes you want to do it more, right? They
Yep.
say if you want to, if you love what you do, you'll never work another day in your life. And I think that's so true. And a lot of times
Yep.
people are burned out from what they do because they have to do it, because otherwise the world will stop turning for them, right? But if it becomes optional and you can really go back to doing things because you truly love them instead of having to do them, because if you don't, the world falls apart, it's a very different feeling and you show up differently to work too.
That's the I
So
just
I
got
think,
chills. I just get total chills from that because that's the dream, right? Like we want to make work optional. It's not that we're all like, I want to retire and then never we what would we do with our time? Or maybe we want to retire and like go do just our passion projects and not have to rely on that income. But I think that changed because I was obsessive, right? Like I used to do all the retirement calculators and figure out like how much do I need and like you're always trying to like determine what do I need in this nest egg in order to feel really it's just like in order to feel comfortable, right? In order to feel like you can stop working. But like, am I really? Or am I just going to find ways to hopefully set up passive income streams? So I think that that's another thing for business owners just to be focusing on is how do I continue to take myself out while still making money? And like, how can I continue that into perpetuity, hopefully, such that like, I don't necessarily need a $10 million nest egg, even a $5 million nest egg necessarily in order to live the life I want to live, right? Because
right.
I still have options. So that
And the
was
other
like
thing
something I had
too,
to change about myself too.
yeah, and I want to say, like, for women, like, and because when you're talking, it's just the word that came out was security, because we want
Yeah.
security. I would say
Yeah.
probably more so than men. And
Yeah.
so, but there with finances, we hear the words financial independence and then there's financial security. And to me, they are two different things.
Mhm.
Financial independence means that, you have, let's say those passive source of income where money's coming in. And basically, in order to be financially independent, you need to have more coming in than is going out.
Mhm.
So if, $4,000 a month is going to cover all of your expenses and you have a source that brings in $4,000 a month without you having to work, guess what? You're financially independent. You don't need to have $100 million net worth to be considered
Mhm.
financially independent. Now, financially secure is another thing, because what if there is an interruption to that income? Is then everything going to get flipped upside down? And the interruptions that I'm talking about, and unfortunately seeing more and more of these things with people in their 20s, 30s, 40s, and 50s, where maybe we weren't expecting it until later in life, it's major medical things. If you
Mm.
have a major medical thing that happens, and usually those things are unexpected, whether it's a really bad car accident or some accident of some sort, or again, some sort of cancer diagnosis or stroke or things like we, again, weren't expecting in younger people, that is becoming more common.
Yeah.
That is probably one of the biggest hurdles to financial security. So we can, and the reason I bring that up is, again, most people, like myself included, is like we think of financial independence of like this giant thing that needs to be there, but everybody's situation is different. I talk to people that can't live on 10,000 per month because their expenditures are above that.
Yeah.
And this is really interesting. When I do my questionnaires, the question is, how much money do you need to have coming in so that you can feel like you're comfortably can live in retirement? And some people say, you know what, if I had 2,000 a month, like I'm good because I don't have a mortgage, I don't have kids, like I don't have these things. And some people are like, you know what, even 10,000 a month is not going to be enough for me. And so
Mhm.
seeing these different perspectives is, it's really personalized things. Like it's not
Yeah.
a one answer fits all. Your number is going to be different than mine, but I think we should all find what that number is for us. Like once we figure out, you know what, I only need 5,000 a month to live comfortably, then I don't have to go like and go through this, the rat race to chase this big number, because if I can figure out what's going to generate that $5,000 per month for me, for a lot of people, that's more attainable than these giant numbers that maybe you see thrown out there.
Yeah, and so personalized. And I also think too, I love the calculation of like, how do I live off the interest, right? Like that,
Mhm.
where you're not like, you figure out that number, right? Of how much do I need, and what if your investments cover that amount? That means that if you just put your money into something generating, I don't know, even if you go, if the stock market is too risky, maybe you're going to bonds, maybe it's 4%, whatever, right? And you're figuring out, okay, if I have this much money, or if I need this much money a month and my investments are generating 4%, what would I need to have in order to just be able to live off the interest and leave the principal? And then you're truly financially free at that point, right? Like you're good to go. Which I think is
And you
such a
can do the
beautiful thing
same
too.
thing with your business. Like you can figure out in my business, if I don't want to actively do the work, I need to have this much. So if I have this business running and I
Yeah.
pay X amount to have, let's say, 2 employees run that. So I also take out the overhead. But now without me being there, this business is bringing in this. We actually call that wealth equivalency. So for business owners, you can figure out either you need to have this pot of money to bring in this amount of income, or if you have a business that pays you this much, whether or not you're there, I mean, that's basically financial independence. It's running
Mhm.
without you having to constantly be there to do the day to day. And so I think the thing that has also changed in the last decade or so is that there's more than one way to get there, with people doing stuff online and all sorts of different things, different ways that have come up for people to make money and to create businesses. There's really no one answer fits all. And you have to figure out, and sometimes it's multiple things, right? You might have a business, you may have some digital products that you create, like you may have multiple streams of income. And I think that's where people are going to. So
Yeah.
with the industrial revolution, before that, people were self-sufficient. They were farmers. They were figuring out ways to sustain themselves. And then everybody got to work in factories and, everybody became dependent on a job. I feel like we're now going back to self-reliance where we have more
Mhm.
entrepreneurs than ever before, or people that want to be. That's why so many people who have a job always also have a side hustle. And I think that's a great thing. Like, I feel like entrepreneurship is back. And I feel because of obviously now we have the technological revolution and there's so many other things. I mean, I think of all the things we have today that I wish we had 20 years ago.
Yeah.
My business would look completely different if I had the tools and resources that I have now available to me 20 years ago when I was first getting started. So I think
Yeah.
it's also a really exciting time and good time to be in business. If you're starting, it's a great time to start a business. If you have been around for a while, it's also a good time to look at what can I change about this to completely change my financial outlook as well.
Yeah. And I think that's the thing, is starting with where do you want to be, right? Like what is the goal? And whether that is, okay, I need to have X amount saved in my retirement accounts and I need to work with somebody to make sure that that's tax advantaged as best as it can be, but I want to have this saved and that would make me financially free, right? Living off the interest or whatever. Or I want to have a business that's generating X amount without me. And once you kind of decide what that looks like, I think sometimes we don't decide, and so we just keep doing, and maybe we're like 110% in our business, working 7 days a week, like you talked about, right? But if we have the goal in mind, a very specific goal of saying, by this time, and I would put a time on it, right? We can talk
Mhm.
about SMART goals here, but we like put a time on when you want to, be able to back out. And little by, it's not going to be an overnight thing. You're never, that doesn't happen. You can't be like, by this time next year, I don't want to be working in my business. If you're working 60 hours a week, ain't going to happen, right? Now, 5 years, 3 years, even if you actively are, proactive about setting up how to make that happen. But if you don't ever set the goal, you're going to be in the same place 5 years from now, probably, right? It's going to be the rolling 5 years. We used to joke with my father-in-law because he always said he'd retire in 5 years, and he said that for like 15 years. It's the rolling, don't get stuck in the rolling 5 years, right? Make the goal, stick to it, and then you will work towards it just by like claiming it and just by deciding. I think that's also the benefit of working with somebody to help you decide on what those goals should be.
And I think the best thing, actually, the best advice I can probably give, the best tip I can give on this video is, make your long-term, let's say 3 year, 5 year, 10 year goals, and then your 1 year goal. But beyond that, set a quarterly goal, because that way, how do you know you're on track for that long-term goal if we're not keeping, because most people, they set New Year's resolution. And by this, we're in the third week, I think, of January. So by now, most people have abandoned those anyways, right?
Mhm.
Because it's like, I'm already too far behind. I'm not going to get there. So instead of setting a goal, and then what happens is in December, people start looking at, oh, I didn't get this stuff done this year. So they start scrambling in December to, to fit whatever goal they want to do for this year. Instead of that, set quarterly goals for the year. And so, and I have clients that I check in with on a quarterly basis, sometimes twice a year, depending on, what their preference is. But if you set shorter term goals, and it's not that, you're going to achieve whatever that thing is in that quarter, but you want to make sure that you are on track, because the only way to, track your progress is by seeing where you're at. If there is no accountability, and that's another thing, when you work with somebody, they also help you keep you accountable, because you know that you have somebody that you're going to be checking in with 6 months or 4 months from now, whatever that time frame may be. And I think that helps too. So set big term goals, but break it down to smaller quarterly goals. And then maybe that will set, break down to monthly goals and then weekly goals. And when you break it down to bite-sized pieces, it makes it so much easier, and it's so much more attainable to do those little things than looking at, oh my gosh, 10 years from now, I have to be at this point. Yes,
Yes.
you'll get there, but today you just have to focus on doing these 3 things.
And
So I think that's the best advice I can give.
have a way to track it too, because I totally agree. Like, the more you can look at it in shorter goals, but sometimes what we do with our goals in our business or in our life is that, January, we set them, we want to do this, but then we're not really like tracking it. We're not really sure if we're on track. So we get to the end of the year and then we're like, oh, we got to revamp every single year. I'm going to try to show you guys this. This is like a behind the scenes. I have a board next to me, and I have set goals for this year. And this year, what I'm actually doing, because I think sometimes, even though I'm a numbers person, I sometimes reject setting really specific numbers goals, because I also am a person who I hate not achieving the goals I set. And I finally got to the point where I was like, well, hey, if I set the goals, even if I get 80% of that, I'm going to celebrate it, because that's way farther than I was. So I made them not just for money, but it's more for, health, for business, for my family. So I had some things. And then my son made some too. Hang on, I'm going to see if this will work, if this will turn. Let's see. This might break. Hopefully I'm not going to break it. Okay. Can y'all see my board? I don't know if you can see any of that. So these are my goals up here. Okay. My son then had to do his own. I don't know if you can read it, but my sons are all about like days with no video games, right? Like how many books he's going to read, how many times he's going to like go out of his comfort zone. So we're updating this daily. We even have one at the top, which is our family goal of 365 acts of kindness. So we are actually tracking this. And what I'm doing is, we have like, essentially we've divided all of these by 12. So every month we're like, we need to get at least this much. So for me, it's I'm trying to do 50,000 reps and bike 500 miles. So I know how many I need to get, each month in order to stay on track. And so I'm trying to get ahead now, knowing that like later in the year that enthusiasm is probably going to wane a little bit, but having it right here, and it's become a thing for our family to come in and update this. So I am this year, I'm like, I'm not going to put off goals. I'm going to put them here. If I don't hit them, that's okay. If I don't get 50,000 reps, but I get 30,000 reps, guess what? That's 30,000 reps. Like, I'm not mad about it.
And by the way, if you're hitting all of your goals, that just means that you set your goals too low, because you're supposed to be, you're supposed to be reaching for them. And 100%. I do that too, because as somebody who doesn't like to lose or doesn't want to like not, hit something. But that I've realized that if it doesn't stretch you and scare you, it's probably not a big enough of a goal. So I think that's also a good thing. And when you have it there visually, which having visuals is, really helpful too, because you're seeing that, and that helps you hold yourself accountable. Yeah. And the accountability, when I talk about that, it's not for me, it's for you. The person that's being accountable, it's for them. It's not for the other person that's receiving the accountability, because I feel like a lot of times we're just here to cheer you on and say, yes, you did a great job. And even if you didn't hit your mark, you know what? You still have next quarter. So let's keep going. And so there's no, there's no judgment or no, you didn't, if you're hitting all of your goals, then you're probably setting your standards too low. Exactly. And, and like you said, if you hit 30 instead of 50,000, I mean, if you had set your goal at 10,000, that's 20 more thousand that you would have missed out on. Right.
Exactly. Exactly. So I think that, for me, that's been a really big motivator. And you can do this if you would rather do it analog, this is my analog way of doing it. That's with the pen paper. I've tried to do it with apps and things like that. Sometimes it works, but I find like this visual where I walk in every day and I remember, oh yeah, these are the goals that I set for myself, is really helpful. So think about what works for you. That's totally an aside and not something I at all planned on talking about, but I think it falls into the same thing when we're making goals with money, right? Like, let's make it visual. Let's make it specific, right? What are the smart, give me the SMART goal. What is the SMART goal, Mernie?
Yeah, so specific is definitely, number one, you want to clearly define what it is that you want to achieve. So when it comes to whether it's personal or the business side, is there like a specific amount of debt you want to pay off? Or as a business owner, do you want to grow your revenue by a certain amount?
Yep.
The M is measurable. So again, if you say I want to be financially independent, but don't have a number tied to that, you're never going to hit that because you don't even know what you're going for, right?
Yep.
And then the A is achievable. So again, I like setting goals that are out there, but at the same time, like if you did, 5,000 in revenue this year, you may not go to 5 million next year. Maybe if you invent something incredible and, there are obviously those, outliers, but for most people, you're not going to go from 5,000 to 5 million in 1 year. So then maybe you can go from 5,000 as a brand new business to, 50,000 or, whatever that might be. So I also feel like when we set smaller achievable goals, and we can hit along with the bigger goals, I think that's helpful too. Because I think, for example, in the debt paying off scenario, if you have multiple debts, by paying off the smaller amount first and having something paid off, it typically motivates you to keep going towards, paying off the bigger ones. So with goals, you should have some smaller, more achievable goals along with the the ones that you're reaching for that are, a little bit more challenging. And then, the R is like relevant. So you want to make sure whatever goals you're setting, they're actually aligning with your long-term, both business and personal goals and aspirations. If you are a certain type of person and you're setting goals in something that's not even in your realm, or maybe something you don't even care about, it's not really relevant to you, right?
Yeah.
And then that last part, the T, is time bound. I don't know about you, but the day before I'm about to travel, I get so much more done like that one day before a major travel date because I have a deadline. I need to get all of these things done before I get on the plane tomorrow. So whenever we have a deadline, we seem to get more things done. And so having time bound, basically goals that are tied to a time frame. For most people, it's December 31st, but we also can't set the goal and not look at it until December 31st because we're definitely not going to achieve that if we haven't been in touch with that all year long. And so, but when we do know that we have a tax line come up, I feel like just like with taxes, most people probably get their taxes in, like April 14th or 15th or whenever, like right, or maybe the exact, tax deadline because we know this is a deadline. And so I think all of those things in conjunction, but it really comes down to really easily know what you want, know what that number looks like, and then, create steps to be able to achieve that goal. And so I think the biggest thing is you need to figure out what you want and then work with somebody like myself to help you figure out what those action steps are to get you to that end result that you're looking for.
It's just like fitness. I'm actually working with like a nutritionist who's helping me with some of my health goals. And that's been really interesting because it really forces you to think beyond like swimsuit season, but to think like, what is my real goal, right? I'm trying to get my cholesterol numbers down. I'm trying, like, there's very specific things that I have as health goals. And so then knowing that that's my long-term goal, right? We have built, okay, like what would it take to get there? Okay, well, I'm trying to do, more weightlifting. So like the goal that I built feeds my long-term goal, right? Because we think that that's going to be, my goal is not lose X amount of pounds. That's a shitty goal. I can't fully control the output, but I can control the input. And so I think that's important to think about too, or what are some input goals that you can control? Because sometimes, like, if you're only tracking what the results are, I think results are great. You still want to track them. It's great. But you also want to track the things that you are in control of, how much money you save, not just how much money your investments make. We'll track that too, but how much you save, how much debt you pay down, right? Those are the things that you can control. So, when you're setting these goals, just think about what are those inputs that will get me. Now I know what my long-term goal is. What would it take, right? I have visibility goals on here because this year I'm launching a book at the end of the year. I want to be more visible. And so that's what it is. It's not, how many book sales. Yes, we have goals for that too. But I know if I'm more visible, if I'm more out in the world, right? If I'm speaking from stages, if I'm doing things like that, it is going to, get us closer to the results that we want. And those are the things that I can control. So That's just another total off topic, not really, but like related. But I think this is why I love these conversations,
Right.
it can lead to all kinds of things.
Well, it's like leading versus lagging indicator, having
Yes.
a background in economics, like,
Speaking
you
my
want to
language.
control the leading indicators in your business and in your life, because you can't necessarily control the outcome of the lagging indicators, right? So that's
Yep.
definitely what we want to focus is our input. And then that's also why those check-ins work, because we want to check in to see, okay, I put in this effort, is the result I'm looking for happening? And sometimes that's not
Right.
going to happen in a quarter or in a year.
Yeah,
Even you have to
longer
take
term.
time.
And if it isn't, right, like then maybe it's time to look back and say, well, maybe I picked the wrong input to focus on, or maybe I need to, change that, because ultimately the inputs should eventually impact the outputs. And if they're not, then we need to reassess, right? If I'm doing
That's
all
what
these
first
reps and I'm
practice is.
somehow losing muscle mass, like I probably need to figure out what I'm doing.
Right,
Anyway, okay,
absolutely, it all works together.
I know, exactly. All right. I love all of this. I love all this, Mernie. I'm putting up your consult link here. So book a consult with Mernie, talk through stuff. She's wonderful, as I'm sure you already know. And I love like your financial education forward, that's what you lead with, which is, I think, really important, especially for women, right? Like we want that relational, we want to understand. And so I think that's really important. And you can also get a free ebook, right?
Yeah, it's Change Your Literacy, Change Your Life. And again, talks about education first. And that's a little bit of, it's an ebook that kind of gives you a little bit background information on why financial literacy is so important. And hopefully, you read that. And we have other books and resources available. We have one specifically for women. Our firm is also working on putting out a book for what we call new adults. So people from age 18 to 30, as you're getting into that adulting mode for for finances, we're actually going to have a guidebook for that, which I'm super excited about. It's not quite available yet, but it's coming out sometime first quarter. So we do have so many resources for people that just want to get a little bit smarter. And it doesn't mean that you're not already smart. Some of these things are going to reiterate what you already know, and you may pick up a couple of new things that are going to help you on your financial literacy journey.
Yeah, I was trying to look for my copy. I have a copy of the How Many Works book, and I love that, but I can't find it. I just read it in my office, so it's usually right near me, but it wasn't this time. All right, Mernie, you are the absolute best. Thanks for coming on. This was such a great conversation. We even got into goals and all the things, so how fun. But we will talk soon, and y'all, if you need help or if you just want to get the free ebook, use the links that we have, and we'll be back another time. And thanks, Mernie. Have a good one. Bye,
Thanks,
everybody.
Jamie. Always a pleasure.